Hello everyone, this is Chris from GBC Forex Academy. I want to share what happened to me this week on the Forex market. Every day is a day of learning. In this market, we're always learning, and nobody is a master of it all. No matter how good you are, the market will humble you, and you have to learn from that humility to become more humble. Equally to what you must know is that there's no perfect strategy. No matter how good your strategy is, there are days that the strategy would fail. And that is why risk management is very, 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 very important. That is why it's very, very important. And that's one place I'll give it to Avila. When Avila was teaching someone like me, one of the things that he said, which I will never forget, is using a risk of 0.5%. And if you're using a risk of 0.5%, what will happen is that it will be very, very difficult for you to blow your account. It therefore means that you need to take 200 trades that will go against you for for you to blow up your account. Forex is not a quick rich scheme. It's not a quick rich scheme. It's not like I will put $100, then I will flip $100 to $1,000, then $1,000 to $10,000. If that were to be the case, the richest persons in the world would have been forex traders. So it doesn't happen like that. I believe the reason why a lot of forex traders they lose money and they quit before time is because of the orientation they had before coming into forex. Forex is actually a discipline. If you are someone that is not disciplined, you cannot trade forex. You cannot make it in forex. You'll be frustrated in forex. But let's go into what happened to me this very week. And I learned something from it. I hope you too can learn something from it. Okay, if you go to this very chart, you observe that I use some vertical lines now as a period separator. This is Monday, Tuesday, Wednesday, this is Thursday, and of course, this is Friday. And this very week broke structure to the upside, therefore means that we are bullish. Because this is USD Swiss franc, USD Swiss franc, therefore means that we are very bullish on this time frame. I purposely did not make use of weekly, monthly coming down because all that I was looking for was within this very time frame. There are sometimes that most of the times I start from a higher time frame, but sometimes I enter a particular time frame and I'm able to scan, I'm able to scan through and see what I'm actually looking for. And you observe that on this very week, since we took away this very high, this previous high, we're actually bullish. Now, Monday, using quarterly theory, Monday is the first quarter, Tuesday, second quarter, Wednesday is third quarter, Thursday is fourth quarter. Okay. Now, usually using quarterly theory, part of the things you've been told is that if you are bullish, it's better you buy below the first quarter. So the first quarter in this very case is Monday. So price went on Thursday to take liquidity from the first quarter, and of course, price closed above. On seeing that, I have seen all that I need to see. Then price came and gave a bullish engulfing. Wow. It means that I have seen all I need to see. And okay, then I put a buy on that very trade. And the purpose of my buy on that very trade is to take me to this very upside here. I believe there was nothing that was going to make my trade to cut. So I put a trade and to take me to the upside. And then news came out. News came out by 1:30 on Friday, and news came out from US non-farm employment change. It came out positive. Wow, it was positive, greater than we expected. Then unemployment rate, wow, came out positive. I said, okay, this is it. I knew it. It is finished. And there's something that I did, which usually many traders they do. What did I do? I increased my lot size. I said because it's giving so much confluences, why not increase my lot size? Let me make more than the usual. And if this is my first quarter, and I'm to buy, of course my stop loss will be here. So when price started coming, I said, no, don't worry, you can come down and you are not going to take me out. And of course, what price did, price came and it took me out because I was so shocked. And of course, on Friday, I was humbled. And I broke my trading rules, which I said is if I am trading on a particular lot size based on the account balance I have, I wouldn't change it, no matter how sure I am. And I violated it and it cost me. The reason why I'm sharing this very video, I'm sharing this video because I believe you can learn from my negative experience. I used to have learned from my negative experience because when things like this happen, it makes one better. It keeps one on his feet. It makes one more humble, and you approach the market in a very humble and in a very simplistic, a very simple way. So, of course, it's caught me out. So, therefore, means that my bias for next week has changed. So, what am I hoping price will do next week? If comes price comes to inside this very zone, within this very zone over here, what am I trying to say? Because first of all, took out liquidity, coming here, took out liquidity. I have liquidity here. I have a relative equal high over here. I could equally put a trend line over here. So what am I expecting price to do based on what price has done now? So the price should come to this very zone here. Okay, price will come to this very zone here because this place here is liquidity. This is the zone actually book structure. I would have taken price from here, but look at what happened. This very zone here has mitigated this very zone. So since it has mitigated this very zone here and this very zone, they are not the same. So this one will now act as my double top, which will now become my liquidity. So when price comes here, I'm hoping to bring the price down here. Please, if you like this very video, please subscribe. If you like this very video, please comment. If you like this very video, please share. And I always say in GBC Forex Academy, let us grow together. Remember, keep it humble.